Hey guys, Jared Wesley here of Live Traders, and it's that time of the week. It's lecture time. Guys, this week we're going to talk about how to be dirty little scalpers, okay? Markets are ever changing, and sometimes markets are in a great, wonderful, giving mood, and you can sit there and buy something that's basic and just ride it to the moon or short it to the bottom, etc. And then there's other times where the market isn't so giving, right? And we have that mantra, you can only take what the market is willing to give. Well, lately the market's been a little bit less giving and pivoting quickly here and there. It'll go up a little, down a little, etc. So I want to talk about scalping specifically and how you guys can take advantage of these smaller moves, have a shorter, lower expectation, because everything in trading is about expectation. So today I'm going to talk about 5 or 6 very detailed things to help you be a better scalper so that you'll add more tools to your toolbox. So when the market is in a giving mood, you can use those tools. When the market is a little bit more choppy and sideways, etc., you can use these tools. And then what happens? There's no market that you won't be able to profit from. There's no market that you won't be able to handle, and that's the goal. Get so good at this business that nothing stops you from making money just about every single day. All right? If you like these videos, click that like button, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to be a dirty little scalper. We've been talking recently about ever-changing markets, and markets are always changing, but oftentimes that change in the market is a subtle change, not a huge change. And the markets have been fairly consistent for the last 10 or 15 years. They've been straight up since '09, pretty much. Obviously, we had the pandemic pullback and things of that nature, but for the most part, the markets have gone pretty much up. So there are rare, but it happens where there's a material change in the market, and I think recently we've seen some of that. And some of the longer term holds, 2, 3, 4, 5R, they still work. Stephen crushes it. I mean, crushes it with 4R targets. Jeff Yates still does a lot of the 2R targets, so it can still be done. But sometimes there's different approaches and different ways to handle these market conditions. So one of these is being a scalper. And there's lots of different definitions of scalper, micro scalper, day scalper, and whatever. I'm talking about 1, 2, and 5 minute charts predominantly today. Now we'll look at higher time frame charts because we always do, but I'm talking about taking advantage of 1 to 5 minute charts and taking 30, 50 cents, maybe $1 from some of these, but I'll get into that in more detail in a minute. So how to be a dirty little scalper, and what are some of the really important things that you need to consider when scalping. And I'm going to tell you straight up, some of these things are things that we don't talk about much, and some of these things will go against what I teach brand new traders. Because brand new traders are supposed to be systematic and robotic, because you have to prove you can do something first before you get the leeway or the flexibility to deviate from those very, very strict rules. Okay? So while some of you initially might think this doesn't sound like a PTS when you're talking about stop losses, it actually is. Because when you've taken PTS, you'll know in the money management chapter, there is the tightest available stop loss, 10 cents, right? You know the page I'm talking about. Then there's the 20-cent stop loss. Then there's the 40-cent stop loss. We're going to talk a little bit about that. I probably should have thrown that slide in today, but I didn't. But before we do any of that, it's been a little while, but I think we need to do a when will the insanity stop segment, right? Let's talk a little bit about when will the insanity stop. The world is going crazier and crazier, so why wouldn't traders get a little crazy, right? Get a little jiggy once in a while. This one doesn't have a specific number attached to it, but I don't know that it needs to, right? I have lost a lot of money. What do I do? Forget all this jargon in here. Just read I became overconfident. I didn't put stop losses, and this is what killed me. At least the person recognizes the deficiency. I didn't use stop losses. I didn't. Remember when I told you guys that most traders are gamblers? Well, this is what you're doing when you're not using a stop loss. You're gambling, right? So this person actually had a liquidation event, right? And then it comes down to this second paragraph or third paragraph, whatever it is, and goes, then the second liquidation arrived today. Think about that. It wasn't bad enough that you blew up your account once. You had to do it twice, right? Fool me once, shame on you. Fool me twice, shame on me, right? I've lost everything. I'm extremely angry at myself, at my stupidity. I want to disappear. Guys, I'm only showing this because this is the general modus operandi for people. They mess up a little bit and it hurts. So what? But they really need to mess up badly, right? Jordan said it earlier, you won't change until the pain to stay the same becomes greater than the pain to change. And for most people, the pain to change is something nasty, like blowing up an account, losing lots and lots of money. And then you're like, yeah, I'm dumb. You knew you were dumb in the middle of it. You just couldn't help yourself. I can't imagine telling anyone from my family about this. This was a considerable amount of money. What do I do? The answer for that is simple. Learn from it. That's it. Don't ever do it again. But people do this all the time. And I hate admitting it. It's just stupid. But at least this person admits it. I'm so angry. Haven't we seen this before? I'm so upset at myself. Why? Guys, why? Tell me why. Why is this person so upset at themselves? Is it really the money? Sure, the money matters. Of course, they lost a considerable amount. Is it really the money? Tell me why this person's so upset at themselves, and then we'll move on from this. They knew, and they still did it. That's part of it. That's a piece of it. It's because they thought better of themselves. It's true. They thought, not me. That happens to other people. I'm too smart for that. Not me. Look at that idiot over there. They're dumb, but not me. I'm different. That's why they're so pissed off. So sure, you could say it goes back to the ego. And you could say they knew better, but they did it anyway. No, they had such a chip on their shoulder that they're like, oh, that crazy stuff is what other people do. I'm better than that. And again, it goes back to your ego, of course. And we talk about this in Professional Trading Strategy and Psychology chapter. You are not as good as you think. You're not as smart as you think. And it doesn't matter if you're the smartest person on the planet. You're not immune to stupidity because you're a human being. And humans do stupid shit. We do. The question is, at what point in the process do you catch the stupidity and nip it in the butt and stop and be like, this is really bad? Do you catch it after your account's down 5 or 10%? Or do you catch it after your account's completely blown up and you have to do it twice? This person had to do it twice. You see where I'm going with it? So there are levels of stupidity. We're all stupid at times. Every human on the planet does something dumb once in a while. And we look at it and go, that was dumb. But how far do you let it go? That's right, Forrest. Stupid is, stupid does. How far do you let it go? This person let it go so far, they blew up 2 accounts. I do these When Will the Insanity Stop segments to hopefully catch you guys in the middle of doing it so you can tell yourself, stop, enough. But you keep going, oh, just a little more, just a little more. I need to get my money back, just a little more. Stop. Just cut your losses and move on. All right, let's get into this thing. All right, how to be a dirty little scalper. These are things you need to think about. We're going to go over this slide again later on as a review. And after this, it's just all charts. Some of this is very familiar to you guys, and you're like, well, geez, Jared, we know those first 3. But after that, it changes a little bit. So what is happening? Is it a double bottom that's happening? Is it a V bottom that's happening? Is it a rounding bottom that happened? Is it a breakout that's happening? Like, first you need to define what is happening. Okay? You've already looked at the higher time frames because that's just a given. All right. And now I want to know what is going on here. Is this a stock that's pulling back, but it's pulling back with 50% overlapping bars or 90% overlapping bars? Is it sloppy? Is it clean? Is it controlled? Okay, so what? That's the first thing. Then the next thing is the where. Where is this what happening? Think about what I just said. Where is the what happening? Okay, this double bottom, where is it happening? Is it just a random double bottom on a 2-minute chart? Or is that double bottom happening on top of a 60-minute consolidation? So there's big time support right there. Okay, and then once you know the where and the what is happening where, you want to know how. How did the what happen and where? So how did it get there? And we just alluded to that a little bit. Did it get there with nasty overlapping sloppy bars, or was it a clean sequential move? Okay, then you want to know, is there anything else that's happening that I could add to this? So the what is, it's a double bottom, but is it a double bottom with bottoming tails? Is it a double bottom with a big volume spike? Is it a double bottom with support? Okay, those are those pattern boosters we talk about in professional. So far, you're like, well, duh, Jared, we know all this. Can we just stop? All right. Now there's a few things that maybe you haven't considered. And note, I want to be clear about, these aren't all about pullbacks. Not every one of these is going to be a pullback. Just because it says double bottom, V bottom, rounding bottom, or double top. Sometimes there are breakouts that maybe pull back to support. We buy on the breakout, add on the pullback, right? But then you want to know, what is the stock's ATR, the average trading range? This is a big deal. Okay, this is a big deal. And while I didn't put coin in today's lecture, we traded coin today, right? Well, coin does an average trading range of about $3, sometimes $4 a day. So, what am I saying? And don't get me wrong, I'll show you with charts in just a moment. What I'm saying here is, if I choose to buy coin at $59, knowing it does $3 or $4 in range, the possibility, now remember, there are days, there are exceptions, and that's when we say, we got my hand in the cookie jar, one of those. There are exceptions, but there are times when they exceed their trading range, okay? But if you look at coin and you're like, well, if I buy at 59, what's likely the worst position I'll be in? 55. Correct? Right? If you just literally buy the high of the day and the shit hits the fan and it tanks, 59 or 55 is probably going to be somewhere near the low of the day, because that's right at the high end of the ATR. Okay? You need to follow me on this because it's important. So when you buy and you're looking for a potential breakout at 59, you might want to consider the worst case scenario, which is a $4 pullback. It's not the worst case, it's just one of the worst case scenarios. So, for example, today on coin, I started with like 300 or 400 shares. I thought, well, if it pulls back $4, that'll put me down $1,200 to $1,600. I can handle that pullback, not a huge deal. And I'm not expecting it to do that because there's 2 or 3 support areas way before 55. But I have to respect the ATR. I have to respect the ATR, okay? And again, there are times it does more than the ATR, but that's a different discussion we'll get to, okay? So now that I know what's happening, where it's happening, how it's happening, if there's any pattern boosters, what's the ATR as it's happening? So what's the ATR when it's pulling back to the double bottom at possible support with a volume spike and bottoming tails? Is it at 50%? Is that 100%? Okay, next. What's the market doing? This is, I guess, an easy way or a different way of saying relative strength or relative weakness. Is this pullback happening because the market's tanking? Or is this kind of a random pullback and showing a little bit of weakness in the stock? Because you don't really want to be buying those pullbacks that are weaker than the market, generally speaking, unless you have a strong inclination the market's also going to bounce in your favor. But I want to know what's happening. Why? Because I'd really like to see the stock pulling back near support with bottoming tails near its ATR, but stronger than the market. So those days where the market gets hammered and this stock's fighting the move lower, it's just yearning for that 10-minute bounce that the market's going to give it. Because the markets do what? They go down, they bounce, they go down, they bounce, they go down. And those bounces are shallow, but those are the types of bounces that are going to get these 50-cent moves or 40-cent pops or $1 pops. Okay? And then, of course, this goes for all trades, but what's the expectation? If I see a stock go from 59 to 55, my expectation is not for that stock to see 59 again today. I'd be happy if it saw 56 or 57. So some 30 to 50% retracement is what I'd be looking to see. So the expectation can't be if the stock continues to pull back. The deeper it pulls back, the shallower the bounce. You're not going to get in it, other than the exception, you're not likely going to get the 100% retracement. So don't expect it. So when you get in, what am I saying? Hear me out, and don't get me wrong, we're going to see charts all day after this. Okay, all day. If you get in and you nibble, and I should have put this chart up, if you nibble some at 59, and that's the high of the day, and you start adding a little at 58 and 57 and 56, and it finally pulls back to 55, and you're like, all right, my cost average is now 57.40. Man, the move from 55 back to 57.40 is big time, right? That's more than a 50% retracement. That's a problem, because you're probably not going to get it. You guys, and again, I haven't got to the punchline yet, but I hope you see where I'm going with this. Where I'm going with this is to say, look, in this environment specifically, if you're going to buy the high of the day breakout, be careful. Be very, very careful, because there is a high likelihood there's going to be a form of a pullback. Save some bullets for the pullback, so that if the pullback happens to go a little more than you expect, your cost average is still within a range that you can make money on this trade. That's a very important point I make. You want that to be in a position where you could still make money on this trade without needing 100% retracement. Still make money with a 30 to 50% retracement. And then decisions start having to be made. Well, how much would I have to add at 56 or 55 to get that cost average down? But still be within a reasonable money management approach. So let's take a look at some charts, and it'll start to make more sense. PayPal. PayPal was a stock that we traded yesterday, okay? And I'm looking at this as like a little 3-bar play off the open, right? Good entry, whatever. And for us, okay, this thing peekabooed and then dropped. Now, traditionally, you would have that stop loss. Let me move this right there under that arrow, right? You'd have your stop loss under the low, excuse me, of bar number 2. And you would have been shaken out, and the stock would have gone higher, right? That right here, just FYI, see this is the 2-minute, this is the 1-minute. This red bar, you see the entry right there, 67.8, it peekaboos up by like 15 cents, and then boop, boop, takes out the 67.40 stop area. Well, if this was 2 months ago, I would have taken that on the chin, and I probably would have got back in and maybe made money on the second trade, but I had to overcome the loss of the first trade. Okay? But when we took PayPal, we gave it like a low of the day stop loss, right? Why? Because that's where the support from yesterday was, and that's also the low of today. So if you're getting in this and it does this, now you're okay, because you didn't get shaken out. But I know, some of you are thinking, but you don't have a lot of shares. I mean, if you're able to give a stock $1 worth of room, you don't have a lot of shares, right? You're right, you don't. But that's where this comes into play right here. Let me move this back because it's on that little shakeout, right? But that's where this comes in. If you missed the first entry for whatever reason, you're going to go full on the 67.80 with a stop down below the green bar, and that's okay, because now you have what? Confirmation. if you took the first trade with me with a very wide stop, you're going to add. Exactly, Satya. You're going to add here. And then you're going to raise it up. So the first trade, we're giving it all the room because so many things have been shaking recently. I want to be able to withstand the shake. Okay? And then as soon as it comes back up, I'm getting in same spot. I'm adding at the same entry point, 67.80. I'm just this time tightening my stop so the add can be a pretty good add. All right. Now, before I get to the target, some people will say, well, what if it doesn't do that and just hits and runs? Well, then I'm going to ride it out with a smaller position or look to add on a subsequent pullback later on. Or, like I said, I'll just take a smaller gain. But the goal here is to not lose. I'm not worried as much about the gain. I'm just trading it not to lose. So I need to give it the room. I need to give it all the room. And if it gives me this, which is a confirmation of strength, then I'll add back and all of a sudden everything is well in the world. Okay? So now you do that and the stock, you're in at 67.80. Your stop loss is now like 67.20. So it's about what, 60 cents? Just looking for 50 cents, 60 cents. That's it. And what happens? It goes up to 68.40 and gives you exactly 60 cents. And this is what I said earlier. I'm not, and this is where people start getting a little mushy on me. They start going, Jared, what's going on? This is not you talking. Who's the person who is taking over your body and is speaking for you now? I'm not. My eyes are wide open when I'm about to tell you this. I'm not even looking for 1R on it. What? Half the people just fell out of their chairs. Like, wait, this is a person who was just a month or 2 months ago was going for 2R, and now you're telling me you're not even going for 1? Nope, I'm not. I'm not. Just like Unmol. He's not going for 1R on his option scalps. He's looking for a 30-cent gain, and he's willing to let it go $1.50 against him to get the 30 cents. But do it 95% of the time correctly. 95% of the time correctly. Okay? That's what I'm talking about here. Willing to give something 3 or 4 to 1 against you. And I know the world is crumbling. You're looking outside and going, are there pigs flying and falling from the sky? Jared, what are you doing? You're erasing 20 years of good habits. I'm not. There's still a stop loss. But it's much wider, and you're not looking for 2 to 1. You're looking for like 1 to 2 or 1 to 3. But to do it at a 90 to 95% clip. And we are. All right? So this thing moves up 60 cents. Me personally, I was looking for 50 cents out of this, and it went 60. Great. Okay? Now, okay? This is the same exact stock I just looked at. If you didn't get the 50 or 60 cents, you could wait for another pullback and add more and raise on the pullback if you wanted. And this stock did that. So this stock pulls back. Now, to be fair, this red bar was kind of nasty, right? It was green for a little bit right here, and then it went bloop. But what happened the last time it tested this area? The last time it tested this area, buyers came in. We know this because, hold on, let's go back to it. We can see it right here. Right there. That's the engulfing bar right there. The last time it tested this area, it did this. Buyer stepped up handsomely. Okay, so now retest buy setup on a stock that already had a mini retest. Right? So just think about what I'm saying for a second. The stock already on a 1 minute had a tug of war, and it won the tug of war. And now it pulls back to that area and it's retesting it. And the thing here is it's not even 100% retracement. It's like an 80% retracement. So buyers are stepping up a little quicker. That's another entry. Where? Probably 67.70. Right? Get in. Use probably that wider stop. You could use a tighter stop. And then look for a move back to the high of the day. What we're bouncing off of is support here. But it's not just any old support. It's tested support. It was tested once here, and now it's tested again. The only question is, how aggressive do you want to be with your stop loss? You want to give it a super wide stop? Or do you want to give it a tighter stop? Okay, we know the daily has room. We can see that. We're over the 50 MA. The 50 MA is at 67.86. Okay, we've already broken that above 68. So we're also pulling back now above the MA. We're no longer below the MA, we're above it, so pulling back towards the MA should also be a little bit some form of support. So, now what? This is the same stock. This thing did what? Went all the way back and put in a higher high. Higher high. So if you took that second trade, or third, you got profit there too. Okay, so the first trade, profit, right here. Second trade, profit. Now, here's the question. What about this? Is this a good entry? I need audience participation for me. Yes, no, maybe so, not sure. Give me a wire it in. Yes or no? What about this? Good entry. A little bit of a mixed bag. The majority are no's, but there are a few yeses muddled in here. Depends on the time of the day. No 100% retracement. Needs an igniting bar. Mostly no's. Mostly no's. Okay, so let's talk it through. Let's talk it through. This stock, I think we can all agree, up until this point at 10 a.m., has been a bit choppy, right? A little bit. I mean, bottoming tail, topping tail, moved higher, made some money. Pulls back, made some money. So let's walk through it. Little bit choppy, okay. This high that it put in at 68.50, okay, is what? It's what we call a weak new high. This is not a significant new high, okay? It's a weak new high, all right? Then it pulls all the way back 100+%. More than 100% on this and about 100% on this. This is challenging. Look at the high. It's a weak new high. Buyers were supposed to, after this retest over here, after this second trade right here, buyers are supposed to rip this thing higher. And we're going to remember, this is a stock that can move. So this new high is concerning. It's not a strong new high, like a significant higher high. So now you have a weak new high, and your pullback's 100%. And you do have some volume spikes on these pullbacks. Right there on that little. So sellers there's a lot of sellers in this big red bar. So when I look at this, there should be some bounce, just not a very good one. Okay, let me repeat it. There should be some bounce, just not a very good one. If you're lucky, 68. Okay, and that's maybe enough for some people, but that's a stretch. Weak high, full 100% retracement. This is tough. What happens? It does that. It does the retracement, goes to like 67.75, puts in a lower low, and then gets back to the high. Now, if I'm correct, and I don't remember, someone can help me out, I believe the market started going higher at 10. But again, please help me out. Tell me if I'm wrong on that. I don't remember if the market, the Qs specifically, started moving higher at 10:30. But this is the challenge, right? This was a pretty significant pullback. And it did bounce. And if you're willing to give it room, right, lots of room, you could have sat through that and ultimately got your 50 cents, right? You could have ultimately got $68, okay? But I don't know that I want to feel, quote, that lucky. I want to have a lot more confidence in what I'm trading. The other concern, all right, is now you're starting to get a little bit into the ATR games. All right. Now here's the positive. Here's the positive. Let's talk about both sides. Okay. Yeah, the QSW bottomed at 1030, and that's likely why PayPal ripped, right? I mean, it went higher right as the market did. But here's the positive side. Okay. If you take a look at PayPal, and I don't know the exact number, I'm just eyeballing this up. Okay. PayPal on a normal day, normal, that's key, does about $2. Okay, there are wide range bars here, 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 here. I mean, there's quite a few wide range bars here. And on those days, it will do as much as $4. And that's a monster day. Monster day, $4. Okay, so we'll throw out the quote monster day stuff and we'll keep $2 to $3 average trading range. Let's just say, because of this big move up here, which was $3.50, and then this was like $2, that after those 2 days up, we're on the third day, there's a really good chance that a monster day is not likely in the cards. You just stay with me for a second. Okay. So you could also take a slightly different approach and say, yeah, I agree, Jared. This is a weak new high. It's not significant. This is 100% retracement. And honestly, this bounce, it's not the best. I'm not expecting it to be great. But, and this is where you need to pay attention, you also might say to yourself, from low to high, this stock has put in not quite $2 in range, but like $1.80 in range. Okay? Like $1.80 in range. And this stock averages about $2 days. And if it's something really big, $4 days, but we're not expecting something really big after 2 pretty good days. So there's a higher likelihood it stays within that $2 a day average trading range. Maybe it goes as much as $3. Well, shit. If I get in at 67.50 and I don't back the truck up, I take a small position here. We're never going full in the first entry. Never. And it goes all the way to the low of the day at 67.70, right? I'm down 80 cents. But I'm also what? Near some prior support from yesterday and the bottoming tail from this morning. If it pulls that low, I might just add. So you're at 67.50, you add some at 66.80, whatever, 70 cents. And now your cost average, depending on what you added, your cost average is somewhere just above $67, like, I don't know, 67.15, right? And you're saying to yourself, the odds this thing pukes out and just goes to 65 are really, really slim. Really slim. That would be a $3.50 drop. But if it does, I'll save that last 1/3 of a position for that nasty pullback. Okay, and if that thing does come all the way down to 65, which would be highly unusual, but if it did and you added, now your cost average can drop to like 66.50 or something like that. And then you get your bounce and take your money. And I know to some of you this is confusing, but this is the thought process going through your head. You're looking at support levels. You're looking at how it got there, what it's doing, what the market's doing, the average trading range of the stock, and the likelihood it's going to bounce. It's very rare. It happens, of course. It's very rare. A stock just goes red all day and doesn't bounce at all. It's very rare. A stock goes red all day and doesn't bounce. Especially a stock that showed relative strength to the market, which is why you took it in the first place. So what are we doing? We're mitigating circumstance. What do I mean by that? I'm saying, look, the market's going to bounce at some point today. And this stock's already stronger than the market. So the stock will likely bounce more than the market. Okay? Next, I'm mitigating the fact that it's not likely going to put in nastiness bars. It's probably not going to put in a $4 bar today. It's probably going to put in a $2 to $3 bar today. Well, if it's already showing relative strength, this is very important, guys, so please listen. It's already showing relative strength. that $2 ATR, $3 ATR is likely going to be on the long side, not the short side. You see where I hope this is starting to come together a little bit, because it's already put in $2 of that ATR and it's still green. So now you're looking at like the odds this thing pulls back to the low of the day and then goes another like $3 is unlikely. It's already showed strength today. Most of today's ATR has been green ATR, right? It has been. Look at this orange line and look at the high of the day. It's mostly been green ATR. The trading range of this stock has been mostly green. The odds it like puts in $3 of red, it's unlikely. Possible. Slim. 10% chance, maybe less. See the mitigation? I'm looking at it going, well, if it does pull back here, there's a high likelihood it's going to bounce. It's damn strong. Now, could you have the black swan event and news comes out? Sure. Could you have the market just have one of those $10 down days? Sure. But that's the 5% we're talking about where you're going to take it on the chin that day. And you're going to take that 3x loss. But that's the 5%. Because you're mitigating circumstance. That's all you're trying to do here. Okay? That's all you're trying to do here. Now, let's try it with another stock we didn't trade yesterday. Mara, all right? We're on a 10-minute chart here. This orange line is support, and this orange line is the kind of the bottom area of support. So this stock opens, immediately goes higher, leaves the bottom, you tell, oh my gosh, goodness gracious, what is that? A failed 3-bar play. We've been seeing a lot of these lately. And what I tell you guys, if you put your stop under the bar number 2's low, you got hammered. It peekabooed you in, immediately dropped. Peekabooed you in, immediately dropped. So now, what are we going to do? I'm not saying don't take the 3-bar play. I'm simply saying nibble it. Quarter lot, third lot, nibble it. Okay? Nibble it. Now, if it pulls back against me, I have plenty of bullets left in the chamber to lower that cost average. I'm going to take a look at Mara's average trading range. I can't see the daily, but if I look the last 3 days on the 15-minute chart, it's averaging like 50 cents a day. Yeah, here's a day where it did 75 cents. So if I look at Mara and go, 75 cents is a big day, $1 is a really big day, there's a good chance, a really good chance, that if this thing's at 10.60 and it pulls back to 10, it's going to bounce. Why? Well, 1, it's stronger than the market. 2, it's close to its average trading range on the downside. And 3, that downside strong market close to average trading also happens to be at support. Oh my gosh, what am I doing? I'm lining the stars up. My risk mitigation here is looking really good because I know around the $10 mark it's already pulled back 60 cents. And if I look at the last 3 days, 50 cents to $1 is about what this thing trades for the entire day. So while I know it could pull back a little more than 10, why? Because it average trading range wise, it could probably pull back to 9.50. But that's okay. So it comes back to 10, I'm going to add a few more shares. But I'm going to still save some, just in case it pulls back a little more than I expected. And it does. And then you can add some at 9.70. And this is going to surprise most of you, I may even save a third or a quarter for the oh shit moment. The oh shit moment, and don't get me wrong, I'm not talking about black swans. I'm not talking about like, oh my gosh, Mara comes out and they're going to go out of business. That's not what I'm talking about. I'm talking about the, wow, I didn't foresee that. That wasn't in my plan. I'm going to save a quarter lot, maybe a third lot for that. I mean, if this thing moved $1.50, that would be big time. Really big time. Most likely it's going to bounce at one of these first 2 orange lines because of everything I just said. 1, it already has relative strength. 2, the average trading range is right around that area. And 3, there's support down there. There should be a bounce. Oh, and one more thing. It's a little bit of a double bottom here, isn't it? See this little retest? Pulled back 4 bars in a row, retested that area. And there's a little bottoming tail there. Okay? Right there. Okay? There it is. What happens? Rip. Now, to be fair, was I expecting a rip of this magnitude? No. No and no. But the line in the sand for this stock was 1060, and that's a reason it probably dropped, but that's also a reason some people may have taken it. Do you see where I'm going with this? What I'm saying is this red line on the daily chart down here is right around 1060, 1070, okay? It's right around that area. So some people might take the 3-bar play at 1060 and go, okay, I only need a nickel to break this consolidation. I'll get in a nickel early, and if we break the red line, if we break the consolidation, this thing's going to rip. That's the 3-bar play, right? It's going to rip. I'm buying it just a couple pennies under resistance. But if it breaks it, it should go. It didn't, though. It didn't, though. But you're prepared for all this support in here. See it? Look at all this support at 10 bucks. Average trading range been met. The relative strength overall. You buy some at 10, save a little bit for maybe a lower lot. And here's the thing. You're not looking to make 2 or 3R on this thing. So you're not necessarily going to have a full position here. You may have a half to 2/3 of a lot. But that half to 2/3 of a lot should be good enough to get you what your target is. $500, $1,000. But remember, this is important. If you're looking to get $500, then it could go $1,500 against you. Maybe $2,000. If you're looking to make $1,000, it could go $3,000 against you. Now, it shouldn't happen very often. It shouldn't happen very often. But that's what I mean when I say I'm not looking for 2-to-1. I'm looking for 1-to-2, 1-to-3. And heck, with options, sometimes you'll go 1-to-4, 1-to-5. Yeah? And then you'll add a little. Unwall start with 10 contracts. Then he goes to 20. Then sometimes 30. Then 40. And I think he'll go up as much as 50. And this is what you're looking for. You're playing the game. And then it bounces back up, and you take your 30 to 50 cents. This would be a stock I'd be looking more for 30 cents than 50 cents. Why? Because 50 cents, quite frankly, is hard to get on this stock. It's hard to get. In this case, it gave $1.30. Okay? But normally it wouldn't. Right? Normally you'd be looking, if I can get halfway to the high of the day. So again, you nibbled some at 1060. Small lot. You bought some more at 10. Okay? Maybe you nibbled some more here. Your cost average should be somewhere in the neighborhood of 1020 by the time you're done all your ads. Or most of your ads, 1020. So you need what? 1050 to get out of this thing. Another thing to consider, and I've done this before, I did it today on Coin. Okay? I did it today on Coin. Sometimes, not always, but sometimes the stock isn't done yet and you know it, and you've added on the way down and it gets back to break even, you'll take some shares off at break even. Why? Because you're kind of expecting another pullback. So then when you get the next pullback, you add back again. So now what you've done, you've lowered your cost average even more. Right? I'll explain it one more quick time. Occasionally, you get in a little bit early like I did on Coin. I got my hand in the cookie jar just a little bit, right? Have a good one, Annabelle. It'll pull back, and let's say you go from 500 shares to 1,000 shares. And then it bounces back to break even. You might take those 500 off at break even because you're expecting another pullback. And when you get the pullback, you'll add the 500 back. And what does it do? It lowers your cost average even more. And then it bounces. And it's exactly what I did on Coin today, right? I added on the way down. It got just above break even at one point. I sold half of the ad, and then I added that half back on the next pullback, and then it got my cost average from 59 down to 57.90 or 58. Okay? Here's another example. All right? Average trading range at support matters. So we look at ENVX. This is stock that on the 60-minute, I think we can agree there's a lot of support here on the 60-minute. So the previous day, This stock gapped up to 15.30, whatever, rolled over, bounced by the end of the day. Precedent has been set. You're like, wait, and let's take a look at it on the 15. Gaps up and just gets crushed. What do you get? Bottoming tail, topping tail. Rip. What happened the last time? Tested this area, bounced. So guess what happens? Deja vu, Groundhog's Day. The next day, the very next day, this thing gaps up, goes a little higher, right? We made some money off this, off the initial trade, right? We bought the initial pullback at 15. I don't have it on here because that's on like a 1 or 2 minute chart. We bought the initial pullback and it bounced to 15.50 and we got out. And we got out. Okay? We bought this tiny little pullback on a 1 and we got out. Well, on the 15, it went 1, 2, 3, 4, 5, 6, 7, 8 stinking bars lower. What's happening here, by the way, on this pullback? Talk to me, guys. Take a look at the hint size of the bars. What's happening on this pullback? Where my cursor is, what's happening on that pullback? What's happening? Talk to me. Bueller. Sellers are coming in. Buying pressure is increasing. Really? Thank you, Ricky. Thank you, Ricky. Thank you, Ricky. And the rest of you, shame on you for not even sticking your neck out there. It's okay to be wrong, but you got to try. Look at the size of the bars at the top. Look at the size of the bars at the bottom. Look at the volume at the top. Look at the volume at the bottom. Look at the size of the bars at the top. Huge. 50-cent bars. The size of the bars at the bottom are 15, 20 cents. Look at the size of the volume. Huge. Look at the size of the volume. Quiet volume, resting volume, continuation volume, right? That kind of stuff. Oh, wait, where is it happening again? Oh my gosh. It's happening at 60-minute support, okay? Also on a double bottom on the 15-minute where it previously bounced, and it's 8 bars down. So selling pressure, selling momentum is absolutely slowing down. And it's slowing down exactly where you'd want it to slow down. Now I'm looking for what? Give me a pattern booster, baby. Give me a bottoming tail, change a color bar, doji bar, narrow body bar. Give me all those goodness things and have it happen right here where it bounced last time. Oh, can we talk about average trading range one more time? By the time it got to 14, the stock had dropped like $1.60. How often does this stock put in $1.60? Not very. It does like $1 a day. Look at it on the 60-minute chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Of those 12 days, it's put in what? About $1 range on average? It pulled back $1.60. So it's way above its ATR. And it's getting to an area that the stock previously bounced significantly. It's getting to that area 8 bars down with slowing momentum. This is a no effing brainer for a 30 to 50 cent pop. I'm not expecting a new high. Hell no. I'm not even really expecting a full 50% retracement per se. I'm just looking to get in off the bottom because I know there's 30 to 50 cents in this bad boy. And if there's not, what's the worst that's going to happen to me? It's just going to chop around at break even. It's just going to chop around at break even because it's already down like 50% past its ATR. And guess what? If it goes a little lower, I still have some bullets left to add. So this is one I would feel more confident to take a little more shares. Instead of starting with like a quarter lot, I would probably start with a half lot on this. Why? Because it's already pulled back and done likely everything it's going to do. And I'm not expecting a lot of ads here because of where it's at, how it got there. There's not much left to go lower. And then it bounces 50 cents. You're looking to take 30 cents from this thing. That's it. That, ladies and gentlemen, is how to be a great scalper. And I know some of that was challenging to hear. Like, wait, You're going to do 1 to 2, 1 to 3, not 2 to 1, not 3 to 1. You're going to let it go to secondary levels of support. You're going to factor in the average trading range on the pullback, not for the target, but on the pullback. Yeah, I'm going to do all those things. Okay? Anything under this line after ATR is met is likely a good buy area. Let me repeat it so you can read it yourself, but I'll repeat it. Anything under this line, okay, which is like 1430, after the average trading range is met, which it's been met at 1430, is likely a good buy area. Okay? Because again, you don't know where it's going to start bouncing, but in this case, it made it obvious for you. Bottoming tail, green bar, doji bars. This was an obvious play. They're not all this obvious. Sometimes you just have to bid for them on the way down. Give them room. Okay? And again, to summarize it, what is happening? In this case, the last slide, double bottom. Where is it happening? At support on the 60. How did it get there? 8 bars down with slowing momentum and decreasing volume. Are there pattern boosters? Oh, yes, there are. There's bottoming tails. There's support. There's narrow body bars. There's change of color bars. What's the stock's ATR? Oh, it's exceeded that by 50 cents. What's the market doing? Bouncing. What's my expectation? 30 cents. I'm not expecting a high of the day or $1. Check, 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 check. This thing meets everything you want to do. Everything. That's how you have to look at it. Now, again, I understand some of this will make some of you uncomfortable. And if it does, that's fine. I'm not telling you this is the only way to trade. I'm not even suggesting you should do it. I'm simply saying it's another way, another tool in your toolbox to be better. And it works extremely well. Look at Unwall. I mean, the guy has what? 2 down days a month for the last 9, 10, 11 months? Since I've started doing this, like seriously, 2 down days in a month, 18 up, 2 down. I mean, that's basically what it is. There's a lot to look at. So let me say this before I finish. It's a paradigm shift for me. It's not something I typically have done in the past. So I'm doing it with very small shares. That's why you're seeing, someone that's used to making a couple grand a day is making 500 a day now. But I'm going to bring it back up. Right? I'm going to bring it back up. And that's okay. So if you're thinking about doing this, do it, but do it with small shares. 1, 5, 10 shares. Do it for a month or 2. Get comfortable and then slowly bring the shares up. Because I'm telling you now, this is an unequivocal fact. You will occasionally add a little early, and the stock will go further against you than sometimes you anticipate, and you'll get your hand a little bit in the cookie jar. Now again, you'll have that second or third level of support, and you will have an exit. You will always have a money management. For example, if you say 500 is the max I'm willing to lose on this trade, then you will get out when it hits minus $500. That does not change. But you might only make 200 on the upside, which is a paradigm shift, right? You have to be willing to see red for this to work. Now, that's not the goal. Right? You don't want to just, oh my gosh, let everything go against me. But many will. And then you have to step back and be calm, relax, take a deep breath and go, I expected this to happen. I drew the lines on the chart. I knew what the potential pullback was, right? Take a look at this one again. I knew right here. Orange line at the top, second orange line, and then this is the shit hits the fan one. Save a quarter to a third of a lot for that. But you have to know, as it's going red, you're not going, oh no, you're going, oh yes. Let me repeat it one more time. A little when Harry met Sally moment. You're not going, oh no, when it pulls back. You're going, oh yes. Why? Because I'm going to get to add more shares and make more money. Okay? So when it goes against you, not if, but when, you're not panicking. You're going, okay, I got this. I got this. All right? And this is not exactly the same as what Unwall does. A lot of times his will hit the trend line and immediately go in his direction. He's out. Okay? And he's out. And sometimes these will too. And sometimes they'll go against you. You guys are in a Q's trade that went against you, and he's adding back in certain areas. Right? So, it's amazing when I think these lectures are going to be a little shorter and they're not. Right? I hope you guys learned a little bit about how to be a dirty little scalper. But remember, your money management is still number one. Don't think I'm taking that off the table. You still have to have a maximum loss and adhere to it. Otherwise, garbage. Start out very small, cut your teeth a little bit, learn it a little bit, get better, then slowly raise your risk. Okay? So, hope that'll make you guys better traders. I'm Jared Wesley of Live Traders. We'll get back at it again next week.